In this video, traders, we're going to look at a prop trader of stocks, the 7 skill sets that he possesses. Stay tuned. Hey traders, a very warm welcome to you. So if you trade stocks intraday, this is for you exclusively. Okay, so a prop trader who trades stocks intraday. He's a momentum trader. He trades US stocks. He trades them intraday. We know the type of guy I'm talking about. Sitting on the desk, looking at the market, buying the stocks that are strong, shorting the stocks that are weak, just trading daily, aggressively, pretty actively. And the P&L at the end of the day is the P&L at the end of the day, starts again afresh. So 7 skills that some of the best, this is one of the best guys on this desk exhibit. So first thing is, some of them are obvious, but you know what, the simple stuff sometimes is the best. Some is not so obvious. First one, number 1, buy stocks that look good and are trading well. In other words, he has a criteria for what he perceives as looks good. He's a momentum trader. He's buying stocks that exhibit good upward momentum and are trading well. And trading well means, hey, they're trading cleanly. They're running like $1, $2, $3. They're not running a bit, pulling back massively. They're not got a grubby kind of trade chopping around, causing you grief and hassle. They're trading nicely. The charts are nice and clean. They're exhibiting the right things he needs for momentum. The lesson from that is just trade the stuff that fits in with your criteria. Number 2, short stocks that are going down. Well, you're probably saying that sounds pretty obvious, but it's not as obvious. Often guys are trying to buy stocks that are going down thinking they're going to reverse. End of the day, if it's a weak day, weak, W-A-K-W, you get it, for stock, it's going to stay there for a long time. So get short stuff that is weak. Don't try and be a hero. Buy strong stuff, sell weak stuff, or go short weak stuff. Number 3, not distracted easily. Interesting one here. Now we've gone from an operational perspective to a kind of a bigger picture. This guy isn't distracted. Someone might be shouting, oh, you know, this is doing that, whatever it may be. Maybe something else is just going crazy. If he's in the right trade at the right time, he's focused. He's not getting distracted into something completely different and diverting his precious attention away from what he's trying to do. Okay, number 4, watches 20 stocks. That sounds a lot to me, but you know what, you do what works for you. He watches 20 stocks thoroughly, and I'm guessing he may not trade all of them. I don't know exactly how many trades at any one time. The point is, he's got a universe of stocks. My guess is then he identifies the top 5 that have got momentum, but also has the others on his radar. He's in those, they got momentum. He's squeezing as much juice as he can out of those before he closes the trade and moves on to the next one. Number 5. This is interesting, right guys? This is interesting because this is a strategy that I employ and a strategy that I know a lot of day traders employ. Okay, if he's in the right stocks and the market pulls back, but his P&L does not, he buys more. Let's explain that on a kind of a screen here. I'll tell you what, I've got some room on this side. Let's do it here. So the market is pushing on, okay? The market starts to pull back. If you're long a bunch of stock, okay, and your P&L, let's we've got a red pen in the pocket, let's, perfect, or is red, let's do that. Your P&L is doing this. Let's say your red is your P&L. Let's say this is happening, okay, hopefully you can see that on the board there. The point is, it's flatlining. When the market's pulling back, it's flatlining. So the basket of stock that you're long on isn't pulling back, even though the market is pulling back. He buys more, so you buy more. So you say, you know what, the market's pulling back, it's probably a pullback, and we're probably going to explode again to the upside. The fact is, you buy more of your stock. I'll leave that on the floor. You buy more of your stock so that if the market does explode to the upside, this will rip even higher. Of course, if the market keeps going lower, this may come down, you may lose money. It's not a foolproof thing, but the point is, it's almost skewed. You've almost got that a skewed risk reward ratio. If the market goes to highs, you're going to get a lot of money. If it goes down more, the stocks that you've got are probably going to stagnate. So it's a good strategy, that, guys, and it makes sense as well. Number 6, identifies momentum early. So whatever tools you've got to identify early momentum, whether that is a strong candle off lows, whether that is some kind of read off the open, whether that is a volume change, whether that is an indicator, whatever it may be, identifying momentum early so you can jump on it and run with it as early as you can and jump off when the whole crowd's starting to get involved in it is the key to getting on these momentum stocks and making some money off momentum plays. Okay, number 7, he buys a stock even if it's up a lot. You know, this should be normal for you. Whatever you're trading stocks, currencies, whatever. If it's up, but it still exhibits the characteristics of a strong market, a strong stock, it doesn't matter how much it's up. If that thing's gapped up 5%, rallied a further 5% on earnings, and it's still looking strong, you buy it. Yeah, you might be a bit late and you might have to give some back, but the point is, if you're not chasing, not saying chasing, there's a difference between chasing and buying existing strength. You know, chasing after a really aggressive move at the highs is probably going to be a drawdown scenario. But if it's up, it's pulled back, it's finding a base, but it's still up a lot, that's different. That's finding a good base. It's still strong, regardless of what the number says on the tape. So, and the same with weak stocks as well, guys, just flipping it on its head. So anyway, those are 7 skills of a successful prop trader of stocks. Some operational kind of stuff, distraction, they're not getting distracted easily, kind of watch list. It's got the strategy of if you're in a bunch of stocks, a basket of stocks, the market's running nicely, it pulls back, the P&L doesn't drop down, which is just a proxy really for what the rest of the whole of your stocks are doing, assuming you've got a kind of symmetrical proportion of stocks. If not, you kind of look at the basket, but you get the idea from that. He then buys more for the next leg up, knowing that that's going to disproportionately give him much more of a gain than a loss if the market goes down. Well, that's the play anyway. Identify momentum early and buying a stock even if it's up a lot. All right, guys, hope you enjoyed the video. Take care, keep your risk management, whatever you do, whatever you're trading. Bye-bye.